So just like to welcome everybody. A couple of quick introductions. My name is Philip Nathan, and joining us on the call is Mark Nathan, our CEO, and David Bruton. Both Mark and David are accountants and tax specialists. So they've been dealing with the COVID temporary wage subsidy, both from a client perspective and both from ourselves. So something we're quite familiar with. Just a word of caution, this is ever evolving, and there's new information coming to us every day. So we'll do our very best to answer the questions, but there mightn't be definitive answers to them. So just, I'm going to get up a PowerPoint here to what we're going to do is put up a couple of PowerPoints, and I'll share my screen, and you'll David will jump in then and drive the conversation. Any questions pop up and we'll deal with them as they come up. So just 2 seconds there now. Okay, you should all see the spread there, the presentation there. David, do you have that?
I do, yeah, thanks.
Okay.
So afternoon, everyone. The format we're going to follow is just to give a brief overview of the scheme, but I suppose while we're doing that, to try and address a lot of the questions that have been put to us to date by clients, and hopefully it'll cover some of the questions you have, but if you have any others, as Philip said, please send them our way. So the first part we're going to cover is the employer criteria. We'll move on to the employee criteria after that, and then we'll get into some of the specifics of the scheme. So the main question I suppose we're getting from clients is, what are the qualification criteria and how do you know if you qualify? So the main criteria is whether a business is experiencing significant economic disruption as a result of COVID-19. Now, the key indicators for that are that the business is expecting its turnover to drop by 25% for Q2 2020, that it's unable to pay its wages and other outgoings as normal, and Revenue have also said any other indicators that they publish. So the big one really, I suppose, is the 25% drop in turnover. So a question we're getting quite a lot is, what is that 25% drop measured against, and how do you show that you're expecting a drop of 25%? So it's a drop in expected turnover for Q2 of 2020 of 25%. So what do you measure that against? Some of the examples that Revenue have given are that you could measure it against, for example, Q1 2020, Q2 2019, if that's relevant. They've also said you can use month-on-month drops from February to March, for example, or any other relevant criteria. So what may be relevant there is, for a business that is expanding, what their expected turnover for Q2 would have been versus what it actually turns out to be. So you may have a legitimate expectation that your turnover would increase in Q2 over and above what you did in Q1 or Q2 of 2019. So that should be borne in mind as well. So quite often we're also getting the question, businesses are saying, yes, turnover may drop by 25%. What happens if it actually doesn't drop by 25% ultimately? So I suppose this isn't 100% clear, but to give you our feel on it at the moment, I suppose the important thing to remember here is that you're looking into the future. So you're trying to predict what's going to happen over the next couple of months. That's hard at the best of times, never mind at the moment. Revenue's guidance notes say it's where turnover is likely to drop by 25%. Now I've had a look at the bill that was introduced by the government, and that's worded slightly differently. So what it says there is that the subsidy applies where the business of the employer is adversely affected by COVID-19 to such an extent that the employer is unable to pay the specified employees their normal wages, but that they're making best efforts to do so. And what the legislator or the bill then says is that if you meet the 25% turnover drop, that's seen as an automatic indicator that you're suffering significant economic disruption. So the other point here is that Revenue in their guidance say that their key focus is going to be on significant economic disruption. So the 25% of it doesn't ultimately happen. It doesn't mean that you didn't qualify in the first place, and it doesn't necessarily mean that you'll be penalized down the line, or that there'll be a position where you're trying to repay funds to Revenue. The advice here would be that you should document your decision in real time. Standing where you stand today and looking forward, why do you feel a 25% drop in turnover is likely? So do it in real time. Revenue said, if you're in discussions with your banks, for example, about forbearance on loans or borrowings, that they would take that as pretty much a strong indicator that you're going to qualify for this scheme. If you're relying on overdraft facilities, again, they take that into account, and cash flow projections, sales projections, anything like that. You should have a look at all of those now.
Just a clarification we're getting here, Dave, that so turnover is one thing, but I guess in business cash is king as ever. But even if you'll have done turnover for March, and you might even have a good month for turnover in April, but the ability to collect that cash, if that goes from 60 days to 90 days to 120 days, that's where the business is going to be of the problem. It's going to have a problem. What are Revenue saying about that?
Revenue seem to be focusing quite a lot on the 25% drop in turnover, so they're indicating that needs to be met. But as I said, the legislation is slightly different in that the legislation focuses on a significant economic disruption and best effort to pay wages, and then says that the 25% drop in turnover is shown that you've met that threshold, but it doesn't say it's the only threshold. So I suppose the problem there is that if your turnover, standing here today, if you think your turnover isn't necessarily going to drop by 25%, but you feel like you're going to have significant cash flow impacts, you're probably into a situation where you're going to have a debate with Revenue about it. They may well disagree with you if they come and look at this after the fact. So you would really want to document your case very well. It's highly likely that Revenue may disagree with you on that if you apply.
So if you play the movie on it, and your turnover is flat at best, and even say it's down 5 or 10%, you don't fit the criteria, but your cash flow and your debtors days go out to 120, 160, which is quite likely under the current environment because everybody's hanging on to their cash. What are your options then? Like, Mark, is it your options to talk to the bank, or what's?
Yeah, well, I think Pascal Donoghue really came out with a statement to say encourage all employers really to claim for this wage subsidy assistance, and that's what we've done. Will we experience a 25% decline in turnover? I doubt that. I can't say at the moment, but I do think we'll have significant economic disruption in our business. So again, we don't know what's going to happen down the line in the next 2 or 3 months. It's very fast and evolving. Personally, I found the banks to be quite slow. The headline from them has been that they're willing to support you and all that, but I have not seen that yet. I think who have been very proactive in this case is Revenue. I think one of the two things they've been kind of relaxed on, they're not going to penalize people for late payments. They're also going to support people under a certain salary, 70% of their income. So they've been the ones who've been proactive in this market. Speaking from us personally, I think the banks haven't really supported us a whole lot. Speaking to 1 or 2 of our clients, I think they're in the same boat as well. That might take a bit longer to actually push down through the channel.
So it's kind of normal business from the banks. They're not set up to take massive.
Not really. You have to proactively go at them, and they're looking for all the same information, the timelines with credit and all that. That's what we're finding, and we're dealing with one of the main kind of pillar banks in Ireland on it.
So it's as onerous as it normally is trying to get support.
We're finding that personally at the moment, yes. But listen, again, this environment is changing rapidly. They could have different criteria come next week on how they determine distributing funds from their actual account.
Okay, and so David, then like the message then is that act on this, act quickly, and whether you, at the end, whether you tightly fit the criteria or not, their revenue might be less. I don't know. They won't be as critical as they normally are.
Yeah, I think, certainly I wouldn't shy away from applying for it just because you thought you may not meet that 25% threshold. That's very hard to predict. But if you're in two minds about whether you'll meet the 25% turnover drop, but you're suffering significant economic disruption and you want to keep your staff on the payroll, and this is the way of doing it, this scheme is designed for you.
Okay, and just your last point there on the significant bank balance.
Yeah, this was a question. This was a question that was cropping up quite a lot, and Revenue have kind of come out and answered it fairly categorically. So they're saying if you have a business that has significant bank balances, they're not ruled out from applying for the scheme if they meet the criteria. What they are saying is that you're expected to make your best effort to top up wages to keep them at the normal net salary level. And I suppose just bear in mind that is in the legislation that you need to make your best effort to top up. So if you had a business that had significant cash balances, certainly you can apply, but you probably do need to be seen to be topping up the salaries to the level that you can afford.
Okay. All right, so we just move on to the next section. We'll get to questions when we run through everything. We'll follow up on any of the questions you've asked. It's a bit easier from a format perspective. So I guess that's the employers. What does it look like from an employee's perspective then, Dave?
So, running through the questions we're getting, the main one is which employees qualify. So it's an employee whose employer cannot afford to fully pay their salary because of COVID-19, but they're being kept on the books, so they need to be on payroll. They have to have been on payroll as of the 29th of February 2020, and their employer must have made a payroll submission with them on it between 1st of February and 15th of March for the February payroll. There's no age restriction on employees that can qualify for it. They can be full-time, they can be part-time, they can be on short-term work at the moment. They can also be on sick leave or self-isolating as long as they're being kept on payroll. I suppose the other main criteria is the salary level. So if you've got an employee who's got an average net weekly pay of $960 or more, they're not going to qualify for this. And we'll get into how you calculate that later on. I suppose we know of clients who maybe laid staff off as a result of COVID-19, and they're wondering, can they now use this scheme for those employees who were laid off? The answer is yes, but they need to come back on payroll. They need to be on payroll for the scheme, and they need to meet the other criteria where they were on payroll at the end of February and were laid off in March as a result of COVID-19. And also then the other thing to be careful of is they can't be getting the pandemic unemployment payment at the same time as receiving this subsidy. Now, it looks like Revenue and the Department of Social Protection will talk to one another there, and that the employee would be removed from the pandemic unemployment payment. We've a couple of clients who've maybe taken on new staff, and they're wondering, how does this affect them? So you're going back to your criteria again. Were they on payroll at the end of February? Was a payroll submission made for them within the dates specified? And if not, they don't qualify. So if you had a new hire in early March and unfortunately you delayed them off because of COVID-19, they're not going to qualify. They're probably looking at the pandemic unemployment payment.
So if you had a new employee in early March and you kept them on and they meet the other criteria, are they entitled to a subsidy?
No, they would have had to have been on payroll in February.
Okay, that's tough.
It is, yeah, and I know of a couple of examples where that impacts, unfortunately. So yeah, it can make a difference to a person's business if they can't keep that person on and they're having to go for the pandemic unemployment payment.
Okay. And I know there's been a couple of questions you want to deal with in the next one about USC and the detail on running payroll on this sort of stuff. What's the
Yeah, I mean, we can, I think that's probably covered in the next part. We can kind of get into the nitty gritty on that in a little bit. Just briefly, I'll cover the next two points here. So do directors qualify? Yes. So they're just viewed the same as any other employee for the purposes of this. You apply the same criteria to see whether they're in or out. It doesn't matter if they're an owner or director of a company, they can still qualify. And can the self-employed qualify? No. They're looking at the pandemic unemployment payment. They won't be able to go on this scheme.
Okay. All right, then we just move on to the next one.
Okay, so in terms of how the scheme operates, then some of the questions we've been getting are how much subsidy will be received for each employee. So it's, first of all, it's based on your average net weekly pay, and we'll come back to how you calculate that in a second. The levels of the subsidy that are paid then it's the lesser of 70% of the annual net weekly pay, or 410 euros, where an employee's annual net weekly pay would be 586 or less, and where that employee is on average net weekly pay of between 586 and 960, it's 70% of their average net weekly pay, or 350 euros, whichever is less. And if they're on more than 960 of average net weekly pay, they won't qualify for this scheme. So how do you calculate your average net weekly pay? This is one that's come up quite a lot. First of all, you look at January, February 2020. Those are the only 2 months that are relevant for this. And what you look at then is you take your gross pay for an employee, you take off PAYE, you take off USC, and you take off employee PRSI and you look at the 2 months of January, February for this. And then you divide by the number of insurable weeks in January, February. So if you had an employee who started in, say, third week of January, you'd be looking at dividing the total pay for January, February by a lesser number of weeks than someone who's there for the whole period. And that number of weeks that you can use is capped at 9 as well. You can't use a figure above 9 for that. You also, one other point here in terms of how you arrive at your net pay. So it's gross minus PAYE minus USC minus PRSI. You can't take off anything else in arriving at that net pay. So you can't take off an employee's contribution to pension, and you can't take off any salary sacrifice amounts in arriving at that net pay. So
just a question there. So with the net pay, that it's based on this year. So if you say were salespeople and you had a sizable end of year bonus that maybe brought you above what the 76,000 euro, whatever the number is, but that kicks in towards the end of the year, does that doesn't count for this calculation?
No. So you just look at January, February. Now, if you take your salesman and they receive their bonus for, say, 2019 in January 2020, and that wouldn't normally be part of their monthly salary, that may be enough to rule them out of this scheme, because you just look at January, February. You can't adjust for kind of payments that you wouldn't ordinarily receive, and vice versa. If they normally got their bonus in December, and it can be quite sizable, say, they may still qualify because you're just looking at January, February.
Okay. Yeah. Okay. Interesting.
So one of the things that there's been a bit of confusion about is with the wage subsidy scheme, there's a transitional phase, and then there's what Revenue are calling an operational phase. So there's a bit of confusion about what the difference between those is. And basically the transitional phase, I think it's probably fair to say that Revenue have had a lot of work to do to communicate all of the details of this, get their own systems up and running, talk to payroll software providers to try and get them up and running with this. So in the transitional phase, their systems are maybe not 100% fully functional like they would like them to be. So in the transitional phase, where you're applying this to an employee, the employer will be getting €410 per week per employee. So that may be over and above what the employee is entitled to under the subsidy. Any excess you hold on to and it's due back to revenue. How they'll collect it isn't clear, but it'll probably be by reducing future payments, or else you repay it back to them. So
there's a question there, sorry to interrupt, but the question there, Mark, from the application of it then, it's proving fairly onerous to get the right numbers and then make the application, and
it is, yeah.
the money coming back from revenue. What's your experience?
What we're doing is quite confusing. So I think from payroll in April, you'll find that people are getting actually more of their net wages. So I think what we're going to do is we're going to communicate it to everybody internally here and advise them on that there could be a potential tax liability by them themselves at the end of the year. But I was kind of looking into some ways, like they might have health insurance or health payments or some deductible tax just to offset against that throughout the year. But we're communicating internally to everyone that this has happened, and we're not entirely sure what comes down the line, but there might have to be tax consequences for the employee on this.
Yeah, there's that. I think we did, but it's more the process of applying for it that has been reasonably straightforward.
We applied for it. The thing what we did is we were running off an old payroll software, and I think we needed to get a new add-on. I think it's the Covid-19 add-on, which takes in the credits. So once we got our payroll software updated, we uploaded that to Ross Online, and we applied for it. We've yet to get the credit for it, but we have applied for it. There's been no pushback, but I'm understanding it takes 2-3 days to get refunded on it.
And I think our experience from other clients is that revenue aren't challenging these now.
No, I don't believe so. Not really. So they're looking just to get as much cash into the actual system as quickly as possible.
Okay, all right. Sorry, Dave, I had you in mid-sentence.
No problem. So that covers the transitional phase and what will be the operational phase. I suppose the operational phase, once we get to that, revenue will be telling you each payroll period what subsidy applies to each employee. So it'll be a little bit smoother to run at that stage, hopefully. Just on what Mark and Philip were talking about there, what we've noticed with the payroll software providers is that pretty much every couple of days there's a new update on the software. They're kind of, I suppose, grappling to get up to speed with this. They're doing a pretty good job. And I expect as time rolls on, there'll be less and less manual input required in the payroll. It'll start to streamline a little bit, but at the moment it is a bit, I suppose it's all new, it's a little bit up in the air. So our next question was, can I top up salaries and by how much? So the answer here is yes, you can top up salaries, and you're expected to make the best effort to top up salaries to bring it to the same net pay per payroll period that the employee would normally have. So the top up cannot be more than that. So the revenue of a formula whereby you work out the average weekly net pay, and let's say you've got a monthly payroll, you work out what your average net weekly pay is, you multiply that by 52, you divide by 12, that's what the net pay can be for a given month. That top up, it's the one thing to bear in mind with that is employees may well have a tax refund. So if they have a tax refund, you can pay it out on top of that net salary that you're after calculating. That's the same as what you're allowed to pay them. So I think, as Mark mentioned earlier, or Philip, you could have an employee who's getting paid more in April than they would normally, and that'll be because of that additional tax refund. So how does tax apply to the subsidy? So the subsidy is subject to PAYE and USC, but not through the payroll system. It's what revenue said is that there'll be a review at the end of the year, and the liability that an employee may have will be calculated at that point. So it'll be the employee's liability, not the employer's. And it's likely that it'll be dealt with by revenue adjusting the employee's tax credits. That may be over 12 months, the subsequent 12 months, and maybe over 2 years. We don't really know that yet, but it's likely it'll be by adjusted tax credits unless they have a tax refund due for some other reason for 2020 that can be offset against it. The subsidy isn't subject to PRSI, it's just PAYE and USC. So how does tax apply to the top up? So the top up is subject to PAYE and USC through payroll. There's a special PRSI class that applies, that's J9. So that's 0% employee PRSI and 0.5% employer PRSI.
So, and I guess is it what we're expecting here? And again, when from the start, I said that a lot of this is evolving on a daily or an hourly basis. So, but what we're seeing at the moment, David, is that employees over April, we talk about the next 3 payrolls, April, May, and June, they might get slightly more than they usually get because of how it's been treated from a tax perspective, from a personal and income tax perspective. So,
Yep.
but be very careful to communicate that to the employees, that revenue, what they're giving with this hand, they'll take away with another in maybe 2021 and 2022. They could spread it out over a year or two, but it's important that people know that this isn't extra money, essentially.
Yeah, I think that's important because I suppose most people, whatever you get in your pay package, you kind of view, well, that's my money, that's what I'm entitled to, and revenue taken off whatever they need to. So it's a bit unusual in that sense. I suppose there's 2 impacts from a tax point of view. One is that because a portion of people's salary is now being classed as non-taxable through the payroll system, the subsidy, they're maybe getting the use of some tax credits and cutoff points that they wouldn't ordinarily. And then the second point is that they'll be also taxed on the subsidy element itself. So that will all hit. Yeah, so I think it is very important that employers communicate it to employees. They need to know that there will be a liability that they'll have at the end of the year, and how it's likely to be collected by revenue. Okay. So I suppose we've somewhat discussed this. What if the employee is due a tax refund as a result of the operation of the subsidy? Revenue said you can pay that to the employee on top of the net salary as calculated in accordance with the average net weekly pay calculation. I have seen suggestions from ACCA in particular that an employer could run payroll on a month-one basis. So that would just take in the tax credits and cutoff point for any given month, not the cumulative, which is where the tax refund is going to come from. I'm not sure about that suggestion, to be honest, because it's not in accordance with what revenue are telling you. You'll be filing a payroll return that will have a little red flag on it where revenue is saying this agrees with what we're telling you to operate. So I think it's probably best to maybe give the tax refund to the employee, but flag it for them that it in all likelihood they'll have to pay it back to revenue in future. I suppose another thing people are asking is, will revenue be scrutinizing all of these applications coming in at the moment? The short answer is no. What they're saying is it's on a presumption of honesty. The only checks they're going to be carrying out are very cursory. They're going to check that you've registered for the scheme, that the employer was on payroll at the end of February, and that a payroll submission was submitted for them. That's as many checks as they're going to carry out at the moment. Everything else will come down the line.
Mark, you were saying that something about people with the wrong bank accounts in for this.
Oh yeah, there was there over 30,000 applicants for this wage subsidy?
39,000, yeah.
And I think 5% of them were incorrect bank accounts applied to it. So they're wondering why they weren't getting the money, because they had it to pay revenue, their bank account on their ROS system, but they didn't have it on the refund system. So it's just a small thing, practical wise, we haven't experienced that problem yet, but that was just one or two of the kind of things that I read on the literature in the last day or so, which is just interesting.
I think what you're saying, David, is people revenue are expecting, they don't have the capacity to be able to check this on a case-by-case basis. So
no.
If you apply in good faith, is a phrase I hear quite a bit, but they will have the capacity in a year or two to be able to cross-reference a couple of numbers, see people who applied, check out what their turnover is like. This is something that I'll probably look into once all the dust settles, you would think.
Yeah, I would expect so. I mean, I think it's going to be such a big expenditure for the exchequer that, and so many businesses are applying for it. And also the fact that it's relatively new and there's a short period of time to get up to speed with it, that they are going to audit it in the future, I would imagine. And I would imagine they are going to find issues with it in the future. The experience has always been that anytime you bring in a completely new tax subsidy or credit or anything like that, and it's done in a relatively short time frame, the initial period you'll tend to get, errors and incorrect returns. So I would be very surprised if they didn't audit it in future on a risk assessed basis. So I would imagine what they'll do is they'll come up with a way of assessing who they're going to audit. That may be based on turnover levels you submit in your corporation tax return, maybe based on VAT returns, a combination of both. But yeah, I would expect that.
And I think what you're looking at in good faith, like if you're a company that's manufacturing PPE and you apply for this, then that's probably not in good faith. But you don't necessarily need to be, Mark. You're not saying you don't necessarily need to be a restaurant that's gone down to zero income since.
No, you don't. You don't. This affects almost everybody, Phil. And I think if you everyone's wargaming their whole business at the moment. So one of the things is, what is a significant economic disruption to your business? Speaking personally in our business, we're very much outwardly, we look very much clients all over the world. We probably do envision that there will be some issues there. So we're just wargaming our scenario. We're just applying for whatever funds or grants are available in the short term. If we don't use it, we'll happily return it, but we need to be up first in the line to see this grant, to avail of this grant as such. So basically, we're just wargaming the whole thing at the moment.
And it's important to think that it's a subsidy, so it's not money that revenue is going to be looking at. The Irish government are looking for back off the companies that apply for it. It is money that we are getting from the government.
Correct. Yeah.
Okay, and I suppose when do we get the funds? Isn't it a few days after payroll? Is it weekly or monthly? If you have a weekly payroll, does that make a difference?
It's based on when you make your payroll submission. So what Revenue are saying is they're aiming to get it to you within 2 days of you making your payroll submission. Now, under Revenue's current system, you can make your payroll submission before pay date. So if you were paying staff last Friday of the month, you can submit that earlier in the week. What Revenue are saying is that they'll only process that payroll submission within 4 days of pay date. So I suppose the advice there would be, get your payroll submission in 4 days before payday. Hopefully get your funds into your bank account 2 days after, and you've got the funds in there to pay staff on the Friday.
Okay, so it's pretty good.
It is, yeah.
Okay, so that's that. So what I'll do, I know I have a few questions, so I'm just going to stop sharing my screen, and I'll just be able to jump into the Q&A. So the first one's from Trevor. Will the company get anything back from the government revenue if we do give a little compensation to all our staff who are working from home? And this is more related to the working from home. So if they give I'm guessing, Trevor, that you might be saying if you give extra funding to your staff to enable them to work from home, is there anything coming from the government of revenue on that?
No, you can pay them a certain amount per day if they're working from home. Revenue have kind of said, their small gift exemption an employer can give, the €500 a year voucher. They've said that you can now split. That was always, you could only do it once a year, and that was it. So if you gave a voucher of €250, you couldn't give another one up to 500. They've relaxed that a little bit to say if you want to give a voucher now for 250 and maybe one later in the year for 250 or something like that, you can do it. But they're not going to contribute towards the cost of your employees being at home working.
We've looked into that as well, and even the tax breaks you get from working from home, it's very small, isn't it? It's hardly worth applying for, I think, in reality.
Yeah, I think just from memory, I think you can pay an employee something like €3 a day to cover light and heat and whatever else costs of working from home.
Yeah. Okay, thanks for that, Trevor. Second one is anonymous, which is fine. We are a business that only generates revenue in Ireland via transfer pricing on a cost plus basis. Our costs are not changing significantly during this time, and therefore our revenue isn't changing, but our parent company revenue will potentially be affected. Would we be applicable for the scheme?
That's an interesting one. Revenue have had a number of questions put to them by the Irish Tax Institute in this area about how it applies to group companies, and Revenue said there's further guidance to issue in due course. So it isn't clear at the moment, I suppose, is the short answer. And I would say stay tuned to Revenue's frequently asked questions. They're updating that quite a lot. It was updated a couple of days ago for the last, or most recently. And also, if you keep an eye on the Irish Tax Institute website, they've got a very good COVID-19 page where they're updating it, both with Revenue's updates, but also they're collating questions from tax advisors, putting them to Revenue, and then feeding back on that. So you're maybe not seeing the answer to those on Revenue's website, but you may well get them on the Irish Tax Institute website.
Okay, very good. And I know there was two in or on email. I think there was just about the USC.
Yeah.
Did you happy enough to deal with them during the?
Yeah, I have them here. I can run through them now. So the first question was the COVID-19 payment is put into payroll as a non-taxable addition, but am I correct that employees will be taxed as normal, PAYE and USC on this at the end of the year, and will therefore have a tax liability over and above the sum of total tax refunds that are received each week while on the COVID payment? Should the employer issue a statement regarding this to employees? Yes, that's probably going to be the case. And yes, our clients, we would be telling them, make sure you make your employees aware of this. They need to know that this is coming down the line at the end of the year. And there was a second question there. I want to confirm that average net pay calculated as follows: take the total net pay in the first 9 weeks of 2020, divided by the amount of weeks worked. Example, if someone worked 6 weeks out of the 9 and paid €500 net per week, his average weekly pay is 3,000, being 500 by 6 divided by 6 is equal to 500. Is this correct? Yes, exactly. Revenue said that where someone's getting paid the same net amount week on week in that period, you can just take the net weekly pay and it gives you the same situation.
Okay, perfect. I don't think there's any more questions in there. So we're 40 minutes, so that's more than enough. I guess we'll wrap it up. Thanks to Dave and Mark for attending. Thanks to everybody, all the attendees for listening in. I guess you have all our communication, I have all our contact details if you need to email us with any information. I think the big takeaway, and we're seeing it from the Minister and even Revenue themselves are saying, is apply for this in, act in good faith, get your application in. It's a very generous and very effective subsidy that the government is providing in very challenging times. So, use it and keep the business going.
Yeah. Just one other thing, Phil. I'd like to thank everyone for attending as well. I understand it's very hard times we're living at the moment. Us at Nathan Trust, we're all staying open. We're operational, thankfully, and we will deal with all our clients' needs and all that as usual. But understand it's very difficult circumstances for everyone, and I wish everyone to stay safe as well. Sorry about that, Phil.
That's all right.
I took us on this under tonight.
Not at all. Not at all. Dave, do you want to? You can finish off now.
Dave.
No, I don't think I have anything to add to that. Just as Mark said, I hope everyone stays safe and hopefully everyone's business will come out of this on the other side.
Okay.
Okay. All right. Thanks for that, guys.
Guys,
see you soon.
Bye-bye.